Assalamu alaikum wa rahmatullahi wa barakatuhu, everyone.
وعليكم السلام ورحمة الله.
اللهم صل على محمد وعلى آل محمد كما صليت على إبراهيم وعلى آل إبراهيم في العالمين إنك حميد مجيد. اللهم بارك على محمد وعلى آل محمد كما باركت على إبراهيم وعلى آل إبراهيم في العالمين إنك حميد مجيد. بسم الله الحمد لله والصلاة والسلام على رسول الله. I welcome you all to this special event organized by Monash Islamic Society. We are truly honored and grateful that you have been taking your time to join us in this evening. My name is Ubaid Khan, and I am the privileged of serving as president of MOIS. And for those who may be new to this society, MOIS is dedicated to fostering strong and Muslim community on campus. Our mission is to provide a platform for Islamic learning for all Muslims on campus and also non-Muslims as well, for like spiritual growth and promotion of unity and understanding among all the students. We organize a variety of events and activities throughout the year, from educational workshops and lectures to social gatherings, etc. You can find us more about MOIS on our Instagram page, mois.malaysia, as well as our website, mois.my. Tonight's event is a part of our ongoing commitment to bring you a valuable insight and knowledge that can benefit us all in personal and professional lives. We are incredibly fortunate to have with us in the evening Dr. Mohammed Obaidullah, a distinguished scholar and a leading expert in Islamic economics and finance. Dr. Obaidullah's work had a profound impact on understanding and application of Islamic financial principles around the world. His expertise in the field, particularly in Islamic social finance, is widely recognized, and we are honored to have him share his insights with us tonight, inshallah. As we all know, the topic of tonight's workshop is the role of Islamic social finance and sustainable development. In a world where economic challenges and social inequalities are becoming increasingly pronounced, understanding how Islamic finance can contribute to creating a more just and equitable society is not only important but essential. Dr. Ubaidullah will explore how the principles of Islamic finance can be applied to address these global challenges and promote inclusive growth, inshallah. Before we begin, I'd like to remind everyone to please keep your microphones muted during the presentation to avoid any disruptions, as well as we'll also have the Q&A session at the end of the talk, inshallah, through Slido. We'll be providing the Slido code in the group chat box as well. So you guys can log in or just put in the code in Slido website and put in your questions and submit your questions there, inshallah, and we'll address as many as possible. Without any further delay, it's my great pleasure to introduce our esteemed speaker for the evening, Dr. Mohammed Obaidullah. Sir, you can carry on with the presentation. Jazakumullah khair.
Bismillahir Rahmanir Rahim. Jazakallah khair, Brother Ubaid, for the introduction. Assalamu alaikum wa rahmatullahi wa barakatuh, brothers and sisters, and a very good evening to all of you. Today's presentation, today's discussion, as you know, is on the topic of Islamic finance and its role in achieving sustainable development goals. As you know, these are the United Nations mandated goals for all countries, all members of the United Nations, and these are commonly agreed objectives that need to be achieved. That is what all policymakers across all countries, they seek to achieve. And these are 17 sustainable development goals, starting with poverty alleviation. As we know, zero poverty is the first objective. There are other objectives like freedom from hunger and provision of good education, healthcare, and so on and so forth. Part of these objectives, they relate to welfare of the human being, or as we say, the people, the welfare of the people, and other half or the remaining ones are related to the welfare of the planet. So this is the balance between the people and the planet that the Sustainable Development Goals, they try to achieve. And that is the common goal that needs to be achieved. And as observers of the Islamic finance scene, they believe, and I'm one of them, that this is something, you can call it the second opportunity of Islamic finance. to prove its strength. And the first opportunity, you might ask, what was the first opportunity? The first opportunity was perhaps when the global financial crisis hit the global economy. That was a time when there was an opportunity for Islamic finance to prove sort of both academically and also empirically that Islamic finance principles are something that can provide a permanent cure against this kind of recurring crisis, financial crisis. But again, many of the observers, they believe that this was perhaps an opportunity that was not fully utilized. The second opportunity came when, with the mandate from the United Nations, that here are the 17 goals that all countries need to achieve by the end of 2030. And starting with the turn of the century, we had this MDGs called Millennium Development Goals. And these goals were subsequently enhanced, and they came to be known as Sustainable Development Goals, or SDGs, which are very detailed framework. And I invite all of you to develop your understanding of all these goals and the targets, and how all the countries together, the inhabitants of this planet, they are trying to achieve these goals. Now, on the one hand, we have the Sustainable Development Goals. On the other hand, we believers, we Muslims, have the Maqasid al-Sharia, the goals of the Sharia. And we have, there's a huge literature available for you as students to learn about Maqasid al-Sharia. I'll just restrict my discussion to those aspects of Maqasid al-Sharia which are relevant for today's discussion. And many of you might be, knowing, well aware of the fivefold classification of the Maqasid al-Sharia, which basically relate to preservation and protection of deen, of intellect, and of progeny or posterity, of property. These are the five, goals that are broadly seen to be the goals of the Sharia, Maqasid al-Sharia. And why we say this is a second opportunity for Islamic finance, which is supposed to be governed by these five maqasid, or by the maqasid, whichever way you see it. We can see, you can use the fivefold framework, or you can look at the literature, and there are other authors or scholars which have come up with alternative frameworks. What the lawgiver, the ultimate lawgiver, Allah subhanahu wa ta'ala, wants us to achieve. And that certainly includes the welfare of the people and the welfare of the planet, which is what Sustainable Development Goals they try to achieve. And then we can move on to map the various Sustainable Development Goals, whether it is about poverty alleviation, whether it is about freedom from hunger, or whether it is about provision of good education, or it is good healthcare, or environmental custody, protection or preservation. All these are ultimately related, to the welfare of the human beings and also the planet or the posterity. So this is the second opportunity, which is where we see a lot of work is being done among the academia, as well as among the practitioners. So today's discussion, let me start with sharing a presentation with you, which is tries to concisely put things together for you to follow it better, perhaps. So allow me to share.
You can share, inshallah, there.
Okay, so now we start with with this brief introduction to the Sustainable Development Goals. And of course, as Muslims, we have the Maqasid al-Sharia as our permanent goals to achieve. we have here a kind of compartmentalization, though it's not necessarily required, of Islamic finance into Islamic commercial finance and Islamic social finance. So when we say Islamic social finance, it doesn't mean that they have different goals, but the tool of the mechanisms could be slightly different. When we talk about Islamic commercial finance, we talk about Islamic commercial banking, we could talk about Islamic commercial insurance or investment banking, or Islamic stock markets or capital market or sukuk, and so on and so forth. When we talk about social finance, we are essentially talking about Islamic philanthropy, which is zakat and awqaf, sadaqah, and also the Islamic non-profit sector, which includes perhaps qard hasana or kafala, which are essentially, by definition, non-commercial mechanisms. So that's how we classify broadly Islamic social finance into these two, Islamic finance into these two streams. One is the social finance, another is the commercial finance. Now, if you have those of you who are a little bit interested in the history and evolution of Islamic finance, as perhaps somebody from your one generation ahead, perhaps I can share with you a few things. How this Islamic finance, the contemporary version of Islamic finance, it came about, and then eventually we had Islamic social finance in the after the turn of the century. Islamic commercial finance, as we know, originally, or Islamic finance, mainstream finance, as we know, it had a very interesting coincidence with the birth of another component of mainstream Islamic finance, mainstream finance, which had a lot to do with poverty alleviation. This is called microfinance. And it got popularized, and with the, it came to the mainstream and people got to know about it with the award of the Nobel Peace Prize to Dr. Mohammed Yunus. You might be knowing about the Grameen Bank, and currently, once again, it is back in the news because of political factors. But he started this experiment, or the Grameen experiment started in the almost at the same time when the contemporary Islamic finance, it started taking roots with the establishment of the Islamic Development Bank in Jeddah, Saudi Arabia, and the Dubai Islamic Bank in Dubai. This was the beginning of mainstream Islamic banking and development banking. And that is also the time when commercial finance, they sort of sought to achieve the very same similar goals of poverty alleviation through their own models, which certainly were not Islamic. They involved the use of riba and other components, elements, which were, of course, not very well known at the time. Islamic finance, again, was newly born. And then these two, I would call movements, starting from 1975 onwards, or late 60s onwards, they started taking root, and they moved in different directions. And those who were observing the things very closely, the common view was that both the movements kind of failed to achieve their original objectives. Or there were big question marks on whether at all they're addressing the very mission for which they were, introduced and they were being implemented. For example, microfinance faced this solid criticism that it was leading to a huge amount of, debt, overburdening of debt on the part of the recipients, the poor, the poorest of the poor. It failed to address, or it failed to consider the poorest of the poor as its client because of, again, very similar reasons. They were not bankable. And the credit risk was obviously very high with the poor. And the interest rates were, they were required to cover this high risk of default, the interest rates turned out to be very high. So conventional microfinance has been charging a rate, and there are justifications for it. The justification is that there is the operational cost of offering credit to the poorest of the poor at their doorstep. Obviously, it is much higher than what a commercial bank would charge. And this problem continues, because of which it was generally believed that this was going through a mission drift. It had drifted away from its mission of helping the poor. What was happening on the Islamic finance side? Islamic finance was also born with very, very noble objectives of helping the poorest of the poor. Though financial inclusion was not a term that time was used, it came to be used, became popular much later. But that was also the objective: poverty alleviation by, helping the poor, the maximum number of people who are below the poverty line, and so on and so forth. Even the Islamic Development Bank, which was born in 75, it had these three broad objectives in addition to cooperation between the OIC member countries, or popularization of Islamic finance as a mode. It had poverty alleviation as one of the objectives. So these were all policy objectives. Poverty alleviation, actually, as you know, is the biggest challenge of this century before policymakers. So off and on, you find different models, different policies, different ways of intervention. People try to experiment and learn from their mistakes, bring about modifications in the tools, but the challenge continues. Islamic finance was again facing these challenges of large-scale poverty especially in the Muslim countries. If you look into the statistics, they present a very, very dismal picture when it comes to the OIC member countries, except perhaps the top few, members of GCC and a few other countries. Most of the countries, they in terms of development, in terms of poverty, their performance is almost at the bottom. So there's large scale and grinding poverty in many, many Muslim countries. And that's a challenge which is perhaps much greater for an Islamic economist who try to find a solution within the Islamic domain. Now, Islamic finance, the mainstream Islamic finance, as we know, Islamic banking and Islamic insurance, you had all the developments taking place in Malaysia and in the Middle Eastern countries. But the initial experiment, or the commercial banking, as we know, they kind of again suffer from the same challenge. They face the same challenge of mission drift, because they were established with the explicit objective of shareholder wealth maximization. Like any other commercial company, the Islamic banks that were set up, they were supposed to be truthful, be honest to their own shareholders, and maximize their wealth. And because of that, naturally, they would also drift away from the high-risk poor, or from doing things which might not be very much in the interest of their own shareholders. Therefore, in the mainstream Islamic finance also, we witnessed a mission drift. A drift from the original, you can see the writings of the academia, who went on to prove that Islamic economics kind of brings in superior methodology of addressing poverty, and it is more inclusive, and so on and so forth. But the Islamic banks failed to kind of come up to the expectations. Therefore, there was something else was missing in the equation, which was, kind of identified, and the realization came much later. An Islamic Development Bank, where I'm privileged to be a part of the team till last year when I retired, of course. It was always on the forefront in financial matters, seeking to find the best way of addressing the challenges faced by the OIC member countries. So poverty alleviation, of course, was one of the biggest challenges, And since the mainstream Islamic finance, of course, that was also a specific, explicit mandate before institutions like IDB, or ISDB as it is known now. So ISDB included that as one objective and one mission-related objective. Another was poverty alleviation. Explicitly, it was another objective. But for some reason, it did not include, it did not consider zakat and awqaf and Islamic social finance tools during those years as possible solutions. It was much later that when the realization came that the for-profit or the commercial mechanisms of Islamic financial services industry, they were not addressing this challenge of poverty as they should have been. And this idea of mission drift also haunted many of these institutions, many scholars, that you have to find a solution. And this was one good project, good initiative of Islamic Development Bank in the year 2012. And I must say I was privileged to lead this project called Islamic Social Finance Report. We were supposed to produce an annual report on the zakat, sadaqah, waqf, and not-for-profit sectors. Because this was the realization, at the time, the Islamic Development Bank Institute was known as Islamic Research and Training Institute, or IRTI. So IRTI was actually the researchers are giving attention to the problems within the entire Islamic economics paradigm, imbalance in the way things were being implemented. The zakat, sadaqah, waqf, and non-profit sector like Khard-e Hasana, they were kind of pushed to the background, and not much data was available, which country is doing what in this field, compared to the commercial sector, the Islamic commercial finance sector. So this was the beginning of this project called Islamic Social Finance Report. And the team went on to produce 4 reports over the next 7 years, and covering almost the entire the Islamic world. Starting with the first report in 2014 was dedicated to Malaysia, Indonesia, and the entire Southeast Asia, Singapore, and also South Asian countries like India, Pakistan, and Bangladesh. And this report was an eye-opener in many ways for the, and also, it kind of, you can give the credit to this publication that for the first time used the term Islamic social finance. Because when we tried to put a label on this report, we were finding it difficult that whether to call it zakat report or sadaqah report or waqf or Khard-e Hasana is something very different. And so clubbing them all together, philanthropy and not-for-profit, was being a bit difficult for us. So initially we thought that maybe Islamic solidarity finance is a better term. But then, there were other reasons why this was dropped, which eventually we said that, okay, this is all about, poverty alleviation, and again, social finance would perhaps capture the essence of non-profit and philanthropic nature of this discipline. So this was, you can say, you can do your research and you'll find that this was the maiden, or the first time it used in any publication or in any documentation, this term social finance. But since then, we have seen this term being used and being popularized, and you have now faculties or centers of Islamic social finance. And this was because of a few revelations from this first report. Malaysia and Indonesia were taking rapid strides in the field of zakat and awqaf. There's a lot of thinkers here who were very seriously, applying their minds to how to mainstream this sector. And data was not available, or if it was available, it was very scarce and scattered and so on and so forth. But here we dedicated some resources to produce this report, and which kind of, we came to realize, and this report kind of underlined the fact that with a little bit of effort at reforming the system, you can achieve huge growth rates in the zakat mobilized, in the field of awqaf, and so on and so forth. Especially in the field of zakat, the There were many exercises, initiatives taken up at an intellectual level, targeted at, for example, uh, arriving at kind of consensus on many intricate issues relating to zakat. Zakat, as you know, is a very can be very sensitive issue for Muslims because it's the third pillar of Islam. So you cannot take it at par. You cannot consider it at par with a commercial transaction. In a commercial world, we just want that this to be halal. That's good enough. It should be free from riba, free from gharar, and so on and so forth. But with zakat, we have to be doubly careful. We have to ensure the compliance with the Sharia principles, not only in the mobilization of zakat, but also while we spend the zakat resources, we have to spend it in accordance with the Sharia norms, Sharia requirements. Similarly, sadaqah or waqf or, waqf had its own, set of rules. And the simplest rule being that the requirement of the waqif or the stipulation of the waqif, takes the form of the law itself. So, and we had countries diverse with diverse frameworks of regulation, diverse histories. For example, India, Pakistan, and Bangladesh were ruled by the British, and the Britishers had implemented created and implemented the Waqf laws hundreds of years ago. So, and they were going through, changes, modifications, reforms, and so on and so forth. So the Waqf laws in many countries were archaic laws and which did not capture or did not comply with the Sharia norms in many ways. There was a need to study the departure of many of these national Waqf laws from what Sharia wants, and also how they were different and what will be an optimal kind of regulatory framework for zakat and awqaf, and also for non-profit sector that will provide an enabling environment for these institutions, for these actors in the sector to survive and thrive and grow. So there's a lot of work being done here, and it was observed that, they were growing at a very fast rate within a very short period of time when these reforms were implemented. That was a very encouraging thing. And the world also took notice of the fact that the zakat resources were not only substantial, but also sustainable by their very nature. Because their annual inflows, it's not that it's going to suddenly dry up 1 year after going in another year. So you can expect to see sustainable growth rate if you continue with your reforms and continue with creating the right kind of infrastructure, right kind of institutions, right kind of education of the actors. You do the right things and you get the results. And you get the results in a fairly sustainable way. Coming to Waqf again, by definition, this is a sustainable entity because you cannot dispose of the Waqf properties. You're supposed to develop it and expand the gamut, the basket of benefits that are supposed to come, and they were supposed to be utilized for religious as purposes. So Waqf was very much a socio-economic institution which was largely underutilized, sometimes abused because of the wrong kind of laws in place, the wrong kinds of regulations in place. But then in whichever country tried to do a first in bringing some reforms, they got some very exciting results. So this is what the world took notice of. And also, for the first time, this report actually produced good estimates of the actual mobilization, which kind of underlined these observations that here is a sustainable source of funding. Now let's continue with some numbers, interesting ones, which will give you an idea of the size of the pie. Again, Islamic Development Bank took a very big initiative in this regard, and though in its own operations, it was still short of using them for providing development finance. But in terms of research, in terms of capacity building, IDB was really doing a lot of contribution by, providing the resources for such research. Now, one of the studies by IDB, again, IRTHI, was that it could estimate the potential global zakat collection. In fact, when we added up these countries, these regions, we had the numbers staring at us, and excluding a few countries, we could make a rough estimate of the global zakat collection based on hard data in the range of $550 to $600 billion. That was 2012 and 2013, which was, of course, published finally 2014, and the next was 2015, 2017. The last version of the report was published in 2020. If you look at these four issues, you'll find the data for more or less the entire OIC, except perhaps the Western world is not covered here. Against this potential, based on the actual collection figures as reported, we could estimate that, the actual collection was just about 10 to 15 billion US dollars, which was about 2 to 3% of the potential. The potential is about 550 to 600. Again, these are very, very crude estimates because, again, based on certain assumptions by the researchers, but then they did their best in at least providing few numbers to work with. So against these numbers, which tell you the potential of global zakat collection, just considering the OIC countries, and you had this just about 10 to 15 billion US dollar, which was actually being collected, going by the hard data. So you had a huge gap, and you were wondering at a policy level what was going wrong or what could be an enabling environment that would help us bridge the gap. But then, what are the big things that we are going to achieve? There are again some few interesting studies just to underline the potential in terms of the development goals, in terms of poverty alleviation. What could we achieve? Again, there are two interesting studies, one by IDB followed by a World Bank study. Now, they demonstrated that under certain assumptions, that if you have, on the one hand, you have the potential zakat, and on the other hand, you have the numbers for the head counts are there, the number of poor who are below the poverty line in countries across the globe. Now, crude estimates, again, they showed that if you can just give away your zakat, whatever is the potential, you are able to collect it. And we're not talking about any other public expenditure or government budgets or anything, just the zakat alone. If it is transferred into the hands of the poor, people who are below the poverty line, then you can push every single poor above the poverty line by a simple cash transfer. This was a hypothetical situation, of course, because neither pushing the actual or bridging the gap between actual and potential was that easy, nor was it easy to transfer every single dollar collected or single dinar collected to the hands of the poor. There would be operational, there would be infrastructural issues, and so on and so forth, challenges. But this was a hypothetical scenario that showed the potential of zakat, Islamic social finance. And zakat is a major tool of social finance. There were two other interesting studies, again, for Awqaf in India and Indonesia. Till that time, nobody knew how much of properties are there under Awqaf in India or in Indonesia. These are huge countries. That time, they used to be the number one and the number two in terms of Muslim population, having huge amounts of zakat, Awqaf properties. Nobody knew what is the potential, what's the value. The study I'm referring to for India is 2005. That's a pretty old study. Since then, no other study has been done. But again, that can give you some indications. For Indonesia, we got the numbers from the Badan Wakaf Zakat in the year 2012. In both the studies, they were telling us the same story, that, okay, you have these 600 million worth of zakat or $1,200 million worth of zakat and Awqaf properties. If you can put these properties into commercial use, into good use, and generate a rate of return instead of leaving them idle, which will be a realistic rate of return for many properties, where prime properties in India at least, I'm very aware of the situation better, that also in Indonesia, many properties were not necessarily farmland, but they were prime properties. So they could be easily developed and put into commercial use. And if you can even earn a comparable rate of return which the market is generating, let's say 10% or 12% on your leases or other forms of return generating mechanisms, then again, this money will be more than adequate to push every single poor Muslim Indian beyond the poverty line. Again, this study showed that. So these were interesting revelations. We're actually trying to, raise the traction for social finance tools and mechanisms. And I think the impact was there. The social finance reports had a significant impact because they underlined two major facts. One, Islamic social funds were recurring and sustainable by definition, zakat and awqaf both. And second is addressing the challenges and attempts to mainstream these sectors can yield very quick results. In fact, if you draw the graph of zakat mobilization, I don't have it now for you, you would be looking at two steeply rising, exponentially growing curves. Zakat mobilization for Indonesia as well as Malaysia, they are something to watch. They are steeply rising curves. So this was enough to drive home the point that you do a little bit of tweaking, reforms, and modernize the sector, introduce IT in terms of collection, in terms of allocation, then you are going to get very, very fast results. So this is something that the first report itself underlined. Now here was another development taking place in a parallel way, in a parallel fashion. This was the United Nations SDG targets, year after year. After 2015, these SDGs were introduced with the measurable targets. And in the subsequent years, the discussion was focusing on meeting the gap. Because if you look at the Millennium Development Goals, which were the precursors to the Sustainable Development Goals, now Millennium Development Goals, the funding was primarily to be done in the public sector by the governments. SDGs looked at the role of private sector. They consider the role of alternative funding sources because the public sources were just not enough. Even after considering the sources, this is a very broad estimate that the targets, they're finding a deficit, or finding a requirement of $7 trillion every year in terms of infrastructure investments, so that you'll be anywhere near the SDG targets. This, of course, the initially 2015, 2016, the conferences, the discussions, the deliberations, they all underline the need for alternative funding sources. And that is where Islamic social finance, its importance was recognized. The result was, again, was seen both in the industry and also among the academia. Among the academia, you have if you do a bit of own research, you'll find studies were undertaken which sought to underline the areas of alignment between the SDGs and the Maqasid al-Sharia. And also the mission drift I was talking about earlier, that was criticized, perhaps rightly, by many observers, that Islamic banks cannot move away from their original goals, that is human welfare, social welfare. And so after the initial euphoria about the success of commercial banking, so this realization led them to follow a slightly different approach. And this was born out of solid work which underlined the ideas of alignment between the SDGs and the Maqasid al-Sharia. Here you have a picture which shows You have the 5 maqasid al-Sharia, the protection, the enrichment, the enhancement of nafs, or the self, which goes with many SDGs of ending poverty, social protection, microfinance, food security, fair incomes to smallholder farmers, and so on and so forth. Provision of affordable healthcare, sanitation, shelter, so on and so forth. Then you have similarly for other the classes of maqasid, it was not difficult to map the sustainable development goals and the targets. Going along with this, of course, there had to be a difference in the Islamic worldview and the way United Nations mandated these goals, which was faith neutral, whereas the Maqasid al-Sharia is fully focused on protection and preservation and enrichment, enhancement of deen. There were these differences, of course, like marriage and family well-being. Islam has a different approach towards marriage, sees marriage as a significant or the most important requirement to achieve the protection of posterity or the nasl. Perhaps not so when it comes to the Sustainable Development Goals. So there are these subtle differences, but there are many areas where they would kind of converge. So this led to, again, renewed call for Islamic social finance being more seriously considered for sustainable finance. Sustainable finance, I mean that finance which is concerned with achieving the Sustainable Development Goals. So the result was, again, you can see it in the writings, in the literature, as also in the case studies of many mechanisms that were put in place. Both scholars and practitioners, they were looking at a possible strategic mix of philanthropic and non-profit funds, the Islamic ones, with the development finance, in a way that this could attract more private capital. So you are looking at kind of composite mechanisms, a blended finance, where private capital also plays its role, and philanthropic-driven capital plays its role, non-profit capital plays its role. But the combined effect is that you can make certain projects, sustainable development projects, attractive enough for the private players. So this is perhaps it became popular over the subsequent years. But we also find some very early examples of ISDB and UNDP sponsored Islamic microfinance programs for poverty alleviation, where a Waqf fund was used basically for meeting the basic requirements. I'm talking about the Al-Aqsa Fund in Palestine. That project, you can still find a discussion of that in the UNDP website, perhaps, even now. So they started quite early in the, if I am not mistaken, year 2007, 8, or 10. That's the time when these joint projects, they were implemented. And they kind of sought a marriage between conventional microfinance models, like the group-based microfinance as championed by Grameen, the Bangladesh Grameen, or the Dr. Yunus. The names are kind of, they go together. They jointly got the Nobel Peace Prize, Dr. Mohammed Yunus, and also the Grameen model. This model had its unique feature of mitigating default risk by suggesting a group-based financing. It had nothing un-Islamic about the model itself. What was un-Islamic was the product. So those who were concerned with providing halal products in the financial sector, they took the best of the conventional ones. This is one approach to Islamic microfinance or one type of Islamic microfinance models. They were also indigenously developing Islamic microfinance models, as you find in Indonesia, for example. But Grameen replications, Islamic replications of Grameen were also becoming popular. So there was a marriage between conventional microfinance in terms of model. The products would be Islamic or Sharia compliant. And also there was use of, or at least it was at a very high level of discussion, the use of work funds for meeting part of the requirements of the beneficiaries. Their basic requirements will be met with that. The capacity building or the training related costs will be met with some other type of funds. And eventually, when they're ready to set up their own micro enterprises, they will be getting, for-profit Sharia compliant microfinance. So these were some very early, in the first decade of the 21st century, these were the experiments. But then they start becoming more and more popular. And in the reports that I was talking about, you'll find more case studies of such combinations or composite structures where part of these zakat and waqf-related benefits, they could be used to absorb certain recurring operational costs. And please remember that these were the justification that was used by Grameen type of experiments to use high rates of interest or high cost of funds. And the Islamic replications of Grameen also, though they were charging less rate of profit, Sharia compliant microfinance I'm talking about, by, for example, IBBL, Islami Bank Bangladesh, they were also they were charging less rate of interest, but still it was higher compared to what a simple bank would be offering. Microfinance by definition was costlier because of the cost of operation. So a new model was contemplated under which many of the recurring costs could be absorbed by, again, the recurring flows that will be that the zakat and awqaf institutions will be providing. And if they could absorb certain of these recurring costs, the result would be that you will be able to offer your product on a commercial basis, but at an affordable price, which made a huge difference, which was the main criticism against conventional microfinance or the conventional approach to finance the poor. It was costly. It was too costly to become unaffordable. So the only way you can make it affordable, again, scholars like to use the beautiful example of the water waqf, which was contributed by Hazrat Usman Radhiyallahu Ta'ala anhu, where the owner of the well was charging a very high price. And so half of the rights were purchased by Hazrat Usman Radhiyallahu Ta'ala anhu, and it was made a waqf, which means it was made free. Now, what was the impact of this? We all would like to fondly remember the impact was that, the seller of that, the other half, it was forced to sell off the rights because there were no takers, there were no buyers of water at such high rate on the other days. So this example actually taught a lot of things and has a lot of implications in terms of pricing. How to bring or how do we price our products if it is a social enterprise, if it has some social goals. So we have to make, like microfinance has very solid social goals, and you cannot use a similar pricing mechanism or strategy as you do for a purely commercial product. So if you're looking at a social product, obviously, you can look at zakat and waqf as possible ways to bring down your costs, operational cost, and hence the price that you charge to the ultimate customer. So this is, again, this was tried out by in some experiments. And again, those of you who are interested in these experiments, I would suggest that at the end of my presentation, there is a URL to a website which has got a lot of the Netversity website, which has got these case studies in the form of blogs. So you can search for, after visiting the website, go to the forum and the blogs section, and you can search for work for zakat, and you will find these beautiful case studies of where the social funds have been utilized to in various ways, sometimes to as grants, sometimes for building capacity, sometimes to cover training costs, sometimes to sort of create new awqaf. There are many ways that they can be used, sometimes to absorb operational cost, and eventually to create an enabling environment in which there is no dearth of social goods and services. Okay, so what are the, again, requirements as we move forward to innovate? We are talking about now sustainable finance, and we are looking at the possible use of zakat and awqaf and other social tools. But we have to take certain precautions. First of all, in what way we can move forward? What are the strong advantages, strong merits? If we're talking about using platforms, using web-based platforms, which will enhance, I just restrict myself to a few examples because it's becoming a huge discipline by itself. So we all know that if you are dealing on a platform between whether it's a buyer and seller meeting on the platform or a donor and donee meeting on the platform, the use of the platform essentially can enhance transparency about the transaction, about the players, the actors. It can enhance accountability of the actors. How? And how they are very, very relevant for how they can enhance the efficiency of the zakat and waqf institution itself. We can see very clearly the benefits here that in case of zakat, as we know, the eligible beneficiaries are stipulated by the Quran itself. You cannot use discretion in distributing zakat to someone who doesn't qualify to be a beneficiary, who doesn't belong to one of the 8 asnaf or the eligible categories which have been defined by Sharia. So you have to be very careful about who is going to receive the benefit of zakat. Now, that requires identity. And identity can be a big constraint if you're talking about humanitarian crisis, where people lose their documents and, maybe coming from the lowest strata of the society, they never bother to prepare, develop, or prepare those documents. So it's difficult to give an identity, and many of them, they come without identity. So the idea of a digital identity and a platform can help you keep track of the flow of goods and services, the benefits to the eligible beneficiary. And there have been very good use cases here, award-winning cases where these were used for helping the displaced persons, families in Syria, in Palestine, and so on and so forth. And you have other examples. I'm just quickly going through this. Incentivization of volunteering, for example, this is a sadaqah of efforts, or you are making a sadaqah of assets, of waqf, and so on and so forth. Now, there are platforms have come up which try to incentivize this via social cryptos, basically to monitor, to keep track of the contributions, not necessarily to make it a marketable crypto and make money out of it, but more a kind of recognition of somebody's contribution you can incentivize the process through social cryptos. And it is also now well documented that blockchain provides a way to preserve Awqaf-related deeds and documents. And the loss of the Waqf deeds, that's the single most challenge facing the global Awqaf sector, why we are unable to develop our billions of worth of Awqaf assets. The single most constraint is the loss of the Waqf deed. And we also know using technology like blockchain, you can perpetually preserve the Waqf deed that is prepared by the Waqif or the donor, and which has the sort of force as if it is given by the ultimate lawgiver, it is given by Sharia itself. So this is something to be preserved, perpetually. And that's possible using on a platform which is powered by blockchain. So it provides that immutability to Waqf assets, which means you cannot tamper with the contracts, with the deeds, or any other document related to the Waqf. And you can use smart contracts for the development. And this is where you're opening up the doors to private capital, commingling of private capital with Waqf capital. As long as you have tamper-proof documents, contracts, auto-executable contracts, then you are making it more attractive to the private players, to the private investors. I'm not using Waqif, but investors of investment capital to come forward and mingle that with Waqf capital. And of course, you have to keep in mind all the Sharia-related requirements when it comes to separation of these different sources and the sharing of the returns, the benefits. Once you have created the sukuk or the instrument and put it on the blockchain, then it becomes kind of tamper-proof and a kind of long-term evidence of documented evidence of, and it's kind of provides perpetuity to the arrangement. Okay, so these platforms basically they provide undiluted emphasis on stipulated and designated beneficiaries via impact measurement. It's a new thing again that we are trying out, alhamdulillah, as on a platform, that how to measure impact of these different projects, different initiatives in terms of maqasid al-Sharia and also in terms of the SDG goals. And by so doing, you can have a community of donors and social investors who are much more satisfied and with the compliance aspect of the game. These are 2 or 3 quick examples before we end my presentation. Again, platformization can enhance actually transparency, accountability. We have some of these good case studies. Again, you can find at the website on the Netversity portal and also the blog site. You will find complete case studies on these. The Singapore, MUIS Singapore, Majlis Ugama Islam Singapore, they are the pioneers, in fact, when it comes to issuing sukuk for financing the development of Awqaf. And these Musharaka bonds, they are the first of their kind to commingle to facilitate the mixing of private investment capital, profit-seeking capital with Waqf capital for development. And it was a combined development, mixed development. And again, you have very detailed case studies of that. What are the challenges and how they were, tackled and so on and so forth. The end result was just fine for all the parties. It was a win-win for all the stakeholders. Similarly, you have Malaysian excellent cases. I've taken one from Singapore, one from Malaysia, and one from Indonesia. And these case studies, again, let me underline, these are available for you at the website. And Indonesia is the latest one, Cash Waqf Linked Sukuk, which bagged the IDB prize for innovation this year. And which basically, it makes the rate of return on the government infrastructure bonds below market. Yet, this would be accepted by the market because the market now comprises Waqf donors. They're not comparable to the market-based investors who would benchmark their expected return with what is provided by sometimes by the conventional markets. So here we had the sukuk owners would be Waqif would basically be happy with a below market return. They would of course forgo these returns. The returns would go for meeting a different type of stakeholders. Madan Waqaf will mobilize all these returns, maybe below market, but they are positive returns. So they'll be mobilized and put into social causes. So the infrastructure agency, that financing body, will enjoy the benefit of below market cost. So this is a win-win for several types of stakeholders. You have on the one hand, you have the infrastructure financing body. On the other hand, we have the Madan Waqaf. We have the beneficiaries of the Waqf funds. And finally, we have the Waqif who is happy with doing a Waqf, which is the benefits of which he can see with his own eyes. In fact, the benefits of the first issue of the cash Waqf-linked sukuk, they were donated for an eye hospital based in Jakarta. And this was managed by a very well-known leading non-profit organization. So the entire, the returns that were transferred into the hands of this eye hospital. And subsequently, you can set your own goals when you go for additional issues of this sukuk. Okay, so I have tried to very briefly, give you a brief synopsis of what has been happening in the Islamic finance scene, how the thought processes have changed over time, sometimes facing the criticism of emission drift, and eager to exploit or make use of the opportunities to make Islamic finance mainstream. The first opportunity, as I said, came with the global financial crisis of the 2007, 2009, when it was shown, perhaps not very convincingly, that if you shun riba, if you shun gharar, complexity in contracts, or if you had shunned riba and if you had shunned complexities, then perhaps the world would not have seen the global financial crisis, at least not in that with that intensity. The second opportunity, again, the challenge of the SDGs, the Sustainable Development Goals, it still exists. It will continue to haunt our policymakers till the year 2030. Let's see what happens after that. But if you go by the current level of achievement, it is pretty low. So you need a lot of funds to finance. And here we have social funds, Islamic social funds, which have similar goals, similar objectives. So you have another opportunity to mainstream Islamic social finance as an alternative financing mechanism, which is rooted in ethics, and which is governed by the ultimate objective of the welfare of the people and the planet. And I've also provided with you with this URL here. So the various examples that I cited, you will find blogs which explain them in detail. And thank you. Jazakallah khair.